Good morning, everybody. All right. I think we got a tricky situation here um, to start the week, and obviously we got the big Fed news coming. I don't know if there are any surprises there, right? None of us do, anyway. So, looking at a lot of things last week, we've got potentially things set up, I guess, to really go either way. And we've got continuation patterns on many of the sectors. We've got some like the Dow that made runs up that suggest the end of the move. Not that it's going to collapse or anything, just that, the momentum stalls. Wide range bars ending versus looking at the S&Ps here with this wide range bar. You can see the bottoming pattern here, and that's the start of the move, the wide range bar. Right? So it moves up to resistance. It consolidates for a few days, and we get this wide range bar. That's a continuation pattern. Buy above the high, stop below the low. Just based on this time frame. And so we'll see if that follows through. Right now, it's not trading above the high, so nothing to do. Little short-term intraday extended, because of the run up that occurred. And so we'll see where that's going to go. And let's move this up here. Friday's low becomes a line in the sand everywhere, right? Regardless whether it's a continuation pattern or whether, like the Dow, that had the ending bar. And so even though the Dow says momentum is going to slow, ideally it consolidates up there, chops around, or hey, maybe it's a blow off. Honestly, we don't know. But looking at the weekly chart of the S&P, it's certainly coming into an area where, being in a downtrend, a sell setup would form somewhere between here and 400. And so does this continuation pattern go up into that area, or does it go sideways and just break? So leads me to thinking, hey, it's going to be a little bit of a tricky situation here, especially ahead of the news, as to whether this can actually continue into where, based on the higher time frame, a sell setup would form. And as we look at our internals here, breadth being extended, okay, it's supposed to be after a move up, took long enough to do it. Basically, this, we spoke last week how this was flat, doing nothing, and sentiment still doing nothing, which kind of a good thing in that, speculators using options haven't jumped on this situation. This move up, usually, getting enthusiastic. So there's still this hesitancy where it hasn't pushed up. And if it does, this probably does go up. Well, assuming a pullback on what time frame, McGraw, like as I said, if this breaks below Friday's low, obviously it's not going to be good. And you can see the run up, there's no support. So, generally we look at the halfway mark. Here's the support at 380. There's nothing in between here. On SPX, right? There's that open interest at 3850, which is the halfway mark. So, ideally, right, whether you look at open interest or just the way we do it of, kind of arbitrary because there's no support there, of in between this green bar, the middle of it, which kind of puts it at, if they use minor support, this pivot high right here, and you can see this little overlapping congestion right there. That would be where, on a pullback, and, just traders looking to the left, or whether their fib lines may by chance line up with that area somewhere in here, somewhere in this congestion area. So now let's go back and look at SPY and see where it is relative to that, which we can't see it. so we can actually see that it is there. And it has stalled in that area, reinforcing our basic look to the left concept. Where's support? Look over there, you see this congestion area. Drag that up to the top of it a little bit, right there, a little wider, and buyers stepping up at the top of it, which is positive. And now they're creating pivot lows and pivot highs, which is indecision, which way is it going to go? You'll see in a little while. They're long 39.05. Notice where we closed. Yeah. What the top of that bar is. I can. $39.01. Okay, so well, amazing stuff. Well, right at that pivot high, I guess maybe they're subscribers to the newsletter and here in the room and looking to the left, or just utilizing, MTS to just figure out where resistance is. I don't know. How do these levels line up with, JP Morgan doing whatever they're doing, probably with a room full of analysts to figure out through Elliott waves and fib lines and extensions and planetary alignment rather than looking to the left? I don't know. But how many, look over the last couple of years where you've shared with us these different levels, whether, that through these, whether it's JPM or, gamma ray guns and whatever, and we look to the left and there it is. So, hey, you can go take one of these gamma courses and spend on software probably several $1,000s, or you can say, hey, maybe this looking to the left thing makes some sense. It's amazing how it lines up. So, just for today, you can see these top tails, these bars that are kind of overlapping each other at 38.50. Of course, it shouldn't break down below 3,800. Right? The Friday's low is a little bit above that, and if it can get above this high, if that's in the cards, 39.50, which is lined up with these overlapping opens and closes, and then we'll see where things go from there. So I have written down, where are my notes here? 39. I can read my chicken scratch. 39.85 up above. Let me just look there. 39.85. No, there's no juice there. 39.830. Is that today? Oh, 30. Maybe this is a 39.10. No, I need 39.10. We just moved here. Well, again, that's not bad. 39.70. 75 by 85. And it's above Friday's high and it's above 38.50. So I think that's good for today. And definitely wanted to be below 3,800, but there was, well, now there is 37.90 is 70 by 80. So I think that's pretty good distance away from Friday's, above Friday's high and below Friday's low. All right. So let's see if any damage being done anywhere. None. Nothing wrong here. Could set up as a 1, 2, 3. Resting day is typical after a rally day. There's a big void. So, whether we look here or over there, you can see the same area, these overlapping opens and closes. As we go down to a smaller time frame, you'll see that little base. And so there's a big void based on that rally. So it has to create support. So far, it looks fine. So far, it looks fine. Underperformed, NASDAQ, tech. But halfway mark, give or take, we don't have to get a protractor out. And we'll see if it hangs around here. It could be a boring day. Weekly time frame somewhere in here. See these overlapping open and close there. That's about where you would get a sell set up just based on this move down. Not there yet. Hasn't broken support. Friday created a very clearly defined line in the sand where something goes wrong. If it, closes below it, or it shouldn't even retrace all the way down there. If it does retrace below this midpoint, we want to see the open and close stay up in this upper half, and ideally in the upper third. So meaning it could form a bottoming tail bar, which would be fine. A little bit of a correction bar. That would be supportive. And one of the ways to visualize that is, I'm getting a new drawing thing out here, would be to, if you just connect the dots, so to speak, right? What's going on here? It just kind of, even if it dipped down, it was a close, you'd have like a consolidation up here. But if it comes down here, well, then we've got a mess. It opens up the door to going back. So it's objective bar by bar analysis. So for right now, as long as it stays up here, it's just consolidating Friday's wide range bar. And now here's the ending bar, right? Greater than 100% retracement, rallying up with a wide range bar. So that's a wide range bar igniting. And this is a wide range bar ending. Now, ending doesn't mean collapse. It just means expect a slowing in momentum. Reasonable, common sense. That's a wide range bar igniting. And we really didn't get any wide range bar down here. We got pivot and then a retest of the pivot, building some support down here. And then this is your correction bar. And so now, that's support. And I don't know if I got a green one down here. Maybe not. Whatever. Don't go below Friday's low. I wouldn't call that a wide range bar ending. It's just more of a kind of a continuation, kind of a bar, kind of a messy type of a setup with those topping tails being ignored. But so no matter where we look, I just think it's more likely to be a choppy day, but we'll see how it unfolds. Bitcoin has the best continuation pattern here. It's got a void. So that's what I'm talking about with a bottoming tail bar that can dip down relatively deep. So buyer stepped right up at 20,000. That was a big red candle intraday, and they drove it all the way back up into this area. So that's a correction bar. It took out the lows. So now it's getting above the highs here. And these Bitcoin stocks should be decent performers. If this can clear here, it's got room to go up. Now the weekly chart don't look like much of anything, but it survived, this area where there was nothing below, and notice the bottoming tail bar right there in October, taking out the lows, and it flipped back up again. So that's a good pattern, and it's got room to go up. All right, so what time is it? The dollar. All right, we talked about this trading range. I showed you in the video how this is connected to the broader markets, going up and down. And now it's at the bottom of the range. Now, if it goes deep back up, markets aren't going to like that. Those wide range bars are likely to fail that we see on the indices. If this rolls back over and breaks, you should set alerts. That's going to support a long bias for the broader markets. In addition, we've got, that's a 30-year. Here's the 10-year. We have, the pullback in interest rates, which was good for the markets, and now it's a buy setup. If this is going up, the markets aren't going to like it. They're going to be, institutions are going to be hesitant. If this starts going up with the longs, the patterns, as far as longs go, suggest, too far, too fast, hesitation. So even if this goes up, maybe the markets hold up. We do have a red candle on the weekly that was extended and a red candle. So from this time frame, does it break the low? Meaning, does it break this low and head down and maybe a measured move lower, which fuels the markets to go higher? And if the dollar's breaking below its support and this is going down, that's going to be a positive for the markets. And then, of course, you got, the Fed announcement, and the 13-week is not backing off. And it's just hanging up there at 4%. So they're going to raise something. That's what the market believes. Maybe 3/4, whatever they're saying. But set an alert on this. Everybody has this. Set an alert at 4%. See if it tags it. Set an alert on the 10-year. Down below last week's low or above these highs. See if it's going up. Throw a 5-minute chart up there. And silver, gold, they're not going to do much of anything. The dollar's bouncing off of its support, so this should pull in, but it's a pattern that doesn't suggest doing anything with it. It's just a mess. Gold, maybe it's going to break down if the dollar goes back up again, but so easy to imagine getting whipsawed based on the alignment of interest rates and gold and the dollar right here, and with what we looked at in the markets. Oil got this little bottom here, this deep retracement. So ignoring what's over here for the moment, remember down here, it looked like it was going to $70 and then it rips higher. And here's the higher low. Bottoming tails, buyers on the dip. And, today is just starting, but this kind of looks like it should go higher. Obviously it's kind of messy, but, higher low, buyers stepping on the dip. Can it reverse to push up? And the inflation thing, and it's kind of a, when markets are choppy or more difficult, or now things have moved up, you wind up looking at so many different things because trying to figure out what's going on. Whereas, hey, if we had multiple time frames all trending in the same direction, it's like, hey, everything's lined up, everything's firing on all cylinders. You don't have to look at all these different things. But well, lastly, I'll look at this here, at these interest rates. Just touched inversion last week, and so if that 10-year comes down, right? If this comes down, you're going to get these inversions, and this is the 3 versus the 30-year. So while interest rates coming down, the markets would like that. We got this other side of the sword of these very short versus intermediate and long-term interest rates inverting, and those on the fence about recession will start throwing in the towel and saying it's coming. So there's too much to keep an eye on. I kind of like this. Pretty much blue. Some, kind of a nice color. And this one here, I like this line chart. I like looking at line charts at time. Kind of brings clarity to the overlapping candles, right? Bottoming pattern. And at least I don't have any pinkish stuff here. That would be girly, Alex. But anyway. So there you have it. We'll see what today brings. Generally, I guess the broader picture is, hey, above this green bar, up, below that green bar, down. And if it's in between the high and low of that green bar, chop. All yours, Dan.
Good morning. Well, I'll just add one more concept to that. If it stays in between, comment is, for the bullish case, we want it to stay, in the upper, I say third, but 40%, whatever. And the deeper it gets into that, then retracement concepts, then it's putting into question the bullishness of that reversal. But yeah, I mean, I had a hard time finding shorts or their continuation long patterns all over the place. We have a couple here, put spreads that are gapping over the entries. Well, see, now I can't tell. My alarm for Lulu went off. But that, we do put spreads when I just think it's a potent reversal under support. Now, I personally wouldn't buy this as a continuation. It's up too much, it's run too much from 290, and I don't have a big enough resistance target. TBT gapping up. Well, we're going to sell a put spread on that. I don't know what's going on with these little, remember the meme stocks? But we noticed this bottoming last week, actually. Now it's gapping up 31.51. That's a big gap, actually. It's gapping over to the 200. I don't know if there's news or if the Reddit boys are back in town. Because why? I mean, there's nothing fundamental about AMC and GME being related, except they're the two main toys for the Reddit boys. At least they were a year and a half ago, or whatever. But that another bottoming pattern. Let's watch it. I just saw wheat going by. I always look at wheat and corn and DBA, but this is gapping over this red bar in the 20 MA. Let's see what that does in the first 30 minutes. DBA is nothing. That's commodity ATF, corn. I mean, wood, corn. Yeah, I looked at corn too. All right, well, that's gapping up a little bit too. We can watch corn also. The hit movies lately, Rob, I have no idea, none whatsoever. But like I said, why is GME perking here too? LLAP, I saw moving pre-market, but the gap's too big. EQT, little oil stock, gapping up. So we can sell a put spread. 36.50, $2 wide under last week's low. SXC, and gap's too big. These are a couple earnings stocks here. XPO earnings was gapping up, coming in. We'll come back to you. L earnings, it's run too much. And things that run into earnings, or even I was thinking of the FOMC here, that I'm glad we're getting an inside bar, because if this just rallied 2 more big days into the FOMC, then I think that's setting up a short-term exhaustion. I think we would then either close with a bearish engulfing, or big move at the high, which would get the internals in bearish alignment. Gel bottoming pattern 1135, so it's gapping up 10%, and that's too big for me. It's already up 5 bars, but bottoming patterns daily, weekly. Gapping down 34, 30-minute low, day trade short idea, and maybe a call spread. GPN 122. Had a big move. So again, I would love this to have gapped to like 135, and then 30-minute low, be a call spread. But these are still earnings here. That gives me a headache looking at, so I'm going to delete you. ON was up, now down, no pattern, peg, flat. But it's an end of day rally, so it's extended intraday. But that's not bad on a pullback. That would be an ideal 1, 2, 3. So we'll come back to that. Gapping down No pattern, that's a mess. That looks like a buyout, actually. Gapping up and going sideways. ARLP gapping down, no good pattern. CNA, no pattern. I can't tell where it's gapping. So those were earnings. KDP got a wide range igniting Friday on earnings. Wow, that's a bearish gap now. It got a downgrade today. But so I can't personally believe that just a downgrade would cause that much damage. So, if we had that as a long idea, I'll probably kill it here. This I like, bottoming pattern. You got a double bottom retest, nice move and going sideways, holding the upper 50% up to 20. So looks good. Yeah, Fernando on YouTube asking about GME. We talked about that already. They're too extended intraday now. It's gapping over the 200 here. So for gappers, just kind of mark it off here where it's gapping to. That's a huge gap. And it's extended pre-market. So there's no setup right now. Rettle is a long, but I think it has earnings on Wednesday, something like that. That's why I didn't put it in the letter. Let me check. Oh, no. I'm mixing that up with something else. Yeah, no, this one's good. This is a retail bottoming pattern over Friday's high. Looks good. Lulu down now. All right, good. I'm glad Lulu's down because if it was gapping up, we're gonna have a harder time getting the put spread off. AGR bottoming pattern looks good. Cream. Put spread idea. CL. Oh, I sent this in a telegram over the weekend to the advisory letter saying this is what we call a bear gap that bullies. End of day base. That's a beautiful day trade. Long idea. Once we give the green light to longs, I'm doing nothing here with the market gap down. But once I say, yeah, I now have a bullish bias, whether it's 10 a.m. reversal, whatever the case, it provided this doesn't run too much, that's a go-to for a day trade. Visa had positive mention in Barron's. The heading was something having to do with this stock's been beat up too much. And I pull up the chart. I'm like, what are you talking about? Beat up too much? The things, so my first impression was that the guy must have written the article 2 weeks ago because there's nothing beat up about this run. But that's extended, nothing to do there. All right, 5. 5, we were going to do a put spread. So 5-minute high. TVT. Same 5-minute high. I don't want to do it on a pullback. ARC F. All right, ARC F and ARC G are two. This one I gave as a put spread idea, so that's good to go. It's filled. Qs have a nice 5-minute reversal bar. So the Qs, if we were to close right here, which, you know, is pretty much impossible because it's only 9:31. Then this is a beautiful narrow range 1, 2, 3 for tomorrow. Intel, I'm hoping we get a 1, 2, 3 also. Nice gap over a red bar breakout, Climo weekly.